We'll start in the corn market since this seems to be almost the corn planting season. We've got the May corn contract right now down 1 1/4 cents at 3.63. December corn down 1 1/4 at 3.87 1/4. Over in the soybean market, it's May down 3 3/4 at 8.92. November soybeans also on the lower side here today. In fact, a lot of these contracts all at least 4 pennies lower. Let's find out what's going on in the wheat market. July Chicago wheat down 6 1/4 at 4.41 1/4. And Kansas City wheat, thank you very much, for July is down 5 3/4 at 4.34 1/2. For the wheat market in Minneapolis, this was interesting because this market actually started out with a little bit of strength. Now is on the negative side here. July down 1 1/2 at 5.49 3/4. Over in the cotton market, the latest numbers here show us the December is up 13 points at 73.63. All right, let's check in now with Brian Hoops. He is with Midwest Market Solutions. He joins us now from Springfield, Missouri. Brian, what do you think of this market here today with all of the information that we've thrown at it here over the last two or three days?
Yeah, unfortunately, it's not real bullish information. It's a little bit of negative news, and we're seeing the soybean market take out Friday's lows, which were key technical support. The wheat futures in Chicago and Kansas City have fallen to contract lows, which is technically obviously bearish. Corn market is the only one that has held in Friday's lows so far, trading in an inside session. So that's a little bit of a supportive feature. I think the market is starting to turn its attention towards the planting intentions report at the end of the month and spring weather. You see the Minneapolis wheat contract down just a little bit. We are lower, but not near as low as the other wheat exchanges. A lot of spread activity going on with traders starting to buy Minneapolis and sell Kansas City, Chicago against it because of a heavy snowfall, very wet spring conditions for that wheat market. And kind of same thing happening in the corn. Traders starting to maybe slowly come into this market and try and buy it, anticipating we're going to have some sort of a planning delay, but there just isn't much positive other news, and it's a little too early to worry about planning at this time.
You know, you were talking about that news, Brian. Part of that, of course, is the export inspection numbers as well, and those were out earlier today. Corn came in at 765,618 compared to last week's 865,000. Sorghum was actually higher, 63,000. And 583 compared to last week's 58,000 and some change. Soybeans 874,000 compared to last week's 848, so just slightly better. Wheat 592 compared to last week's 488. So as you mentioned, some of this really not having a big effect on the markets. But I tell you what, we need to find out what's going on over in the livestock market. So stay with us. We're going to do that, and we'll get Brian's input on that as well, right here on the Market Day Report. Well, after last week's cash cattle trade winding up, and then we had the cattle on feed report. Today we've got these futures under pressure over here in the live cattle market. April fats right now are down 13 cents at 129.55. Notice we don't see any 130s anywhere on this chart on our graphic here. June down 17 at 120.78. August down 22 at 116.95. We've gotten as high as 129.65 in that front month, that nearby month of April, over in the live cattle market. Now, the feeder cattle market, March down $1.18 at 142.75, April down 135, 146.35, and the May down 83 cents. But the hog market continues its second business day of rally. April, lean hogs up 283, 63.38. May is at an even $71. That's up 208. That's only a nickel off of the top. And June up $1.67. Brian Hoops still here with us. All right, Brian, what do you think of this cattle market? It was kind of interesting. There during the break, you and I were talking a little bit about the winter weather that's going to affect the northern parts of the cattle feeding region. And Christina Loren was forecasting some pretty heavy snows in parts of those areas as well.
Yeah, and that's going to help out our cash trade on a dress basis this week. It's also going to affect feedlot performance. There's going to be a lot of areas, even if they don't get the heavy snow, they're going to get a lot of rain, and those conditions are not going to be conducive to weight gain. So look for weights to continue to deteriorate, especially compared to year-ago levels. And with those weights coming down, that means the numbers that we have coming at us are going to be even smaller with smaller carcass weights. So positive, I think, outlook here for the cash markets in the near term, at least for the next several weeks. More weather should pump in some more premium in that cattle futures. Really not much of a reaction to the cattle on feed that came out Friday, and a lot of the trade expected we wouldn't, because we'll have fresh cattle on feed numbers again in another 2 weeks. As this numbers that we saw on Friday, they were a little bit old and outdated.
With 60 seconds left here, what are your thoughts over in the hog market having this second day of rally?
Yeah, big rally going on the hogs. What we've seen in the hog market was a market that got too overextended to the downside on very heavy fund selling. And this is the type of rally that people who want to see the wheat market rally, maybe corn rally, to occur. Heavy short covering. We just need that fundamental reason. In the hogs, it was because of bad weather. Cash trade turned higher. We could get some sort of fundamental spark over in the grains. We could see a short covering rally, as well as the funds are starting to build in a short position in some of these corn and wheat contracts.
That's a good point. A lot of short positions, with the exception of the cattle market here anyway. Brian, always good to talk to you. Brian Hoops. He is with Midwest Market Solutions. He is based in Springfield, Missouri, kind of close to your own.
That's right. And they're getting more rain once again.
Oh, boy, just what they need.
Yeah, thank you very much, John.